Right now, there is a stack of bills sitting in your mailbox or getting pulled from your account automatically, and the law itself says you do not owe a portion of them. Not a discount, not a reduced rate, zero, gone. And the reason you're still paying is not because you don't qualify, it's because nobody sitting across a counter from you has any reason to bring it up. Some of these rules shifted again this year, in 2026, which is exactly why so many seniors are still writing checks for bills the law already erased. By the end of this video, you'll know which bills those are, who actually qualifies, and the one quiet filing mistake that keeps that money leaving your account every single month. My name is Hank Mercer, and before we go any further, if this is the kind of information you want delivered to you before the deadlines arrive rather than after, hit subscribe right now and turn on the notification bell. What I cover on this channel tracks Social Security rules, Medicare updates, and retirement planning changes as they happen, because the rules do change, and the people who are subscribed find out in time to act. Now let's get into it. The bill you've been overpaying without a fight. Property tax for most homeowners over 65. Property tax is the single largest recurring bill of the entire year, and it's also the bill most seniors have never questioned since the day they moved in. Nearly every state offers some form of relief once you cross an age threshold, usually 65, and the two most common versions work very differently, so it's worth knowing which one your state uses. The first is a straight-up value freeze. The year you qualify, the taxable value of your home locks in place. Your neighbor's home values keep climbing. Their bills keep climbing with them, but yours stays exactly where it was the day you filed. Texas is the clearest example of this. The school district portion of your property tax can be frozen permanently once you turn 65, and there's no income test attached to it at all. Your age alone qualifies you. The second version simply knocks a fixed amount off the assessed value of your home before the tax rate is even applied, sometimes stacked with an income-based exemption on top of that. In some counties, this cuts the bill by hundreds of dollars a year. In others, especially where local exemptions stack with state-level relief, it's well over $1,000 annually, every year, for as long as you live there. Here's the part that trips people up. Your county assessor is not going to look at your birth date and quietly lower your bill out of generosity. You have to file for it, and in most states, you have to file in the specific year you become eligible. Miss that filing window, and in many counties, that year of savings is simply gone. It doesn't roll backward. A single phone call to your county assessor's office asking, "What's the senior exemption and how do I file for it?" can permanently shrink the biggest bill on your calendar. The federal tax bill that's supposed to disappear, and often doesn't. There's a deep assumption in this country that everyone owes the IRS something every April, no matter what. But for a large share of seniors living on Social Security plus a modest amount of retirement income, the honest, legally correct number owed is zero. Two things are stacking in your favor once you turn 65. First, your standard deduction is already larger than it is for someone under 65. That's been true for years. Second, and this is the part that changed recently, starting with the 2025 tax year, there's a new additional deduction specifically for people 65 and older, worth up to $6,000 for a single filer and up to $12,000 for a married couple where both spouses have turned 65. Layer that on top of the regular senior standard deduction, and for many retirees on a fixed income, the math genuinely zeroes out. This is where the "you file too late" problem shows up hardest. That $6,000 bonus deduction only exists for tax years 2025 through 2028 under current law, unless Congress extends it. It's also phased down at higher income levels, so it isn't unlimited, but for most people living primarily on Social Security and modest savings, it applies in full. If someone else prepares your return, a family member, a paid preparer, tax software you don't fully understand, the single most valuable question you can ask this year is whether the full age 65 deductions were actually applied. Because if that box isn't checked correctly, the form defaults to the ordinary amount, and you end up paying a tax bill the law never actually asked you for. There's a quieter version of the same mistake worth flagging too. Many people, when they first started Social Security, elected to have federal tax withheld from every monthly check just to be safe. If your income has since dropped and your deductions have grown, you may be letting the government hold your money interest-free all year, just to get some of it back as a refund the following spring. It's worth pulling out your actual numbers and adjusting that withholding so it matches what you truly owe, not $1 more. The pharmacy counter, and the benefit tied directly to it, if your income is modest and you take even a handful of prescriptions a month, There's a program called Extra Help that's specifically built to reduce what you pay at the pharmacy, your copays, your deductible, and often the premium on your Part D drug plan itself. The government values this benefit at several $1,000s a year for someone who qualifies, and it's applied for directly through Social Security, separate from anything else on this list. Nobody should be cutting a pill in half to stretch a prescription while a benefit with their name already attached to it sits unclaimed because of a form nobody mentioned. If you're managing multiple medications on a fixed income, this is worth 10 minutes of your time this week. The bill that quietly renews every month, phone and internet, here's one almost nobody thinks to check. There's a long-standing federal program called Lifeline that applies a set monthly discount to phone or internet service for people with modest income, or for anyone already enrolled in certain other assistance programs like Medicaid or SNAP. It won't zero out the bill, but it takes a fixed amount off, month after month, on a service you are already going to pay for regardless. For someone counting every dollar on a fixed income, a discount that never expires and never requires reapplying adds up quietly across years, not months. You apply through the official Lifeline system and then present that approval to a participating phone or internet provider in your area. A couple more, worth a quick mention. While we're on the topic of bills that quietly renew, two more are worth a fast check if you're on a tight budget. LIHEAP, the Low-Income Home Energy Assistance Program, helps cover heating and cooling costs for qualifying households, and many states run their own weatherization assistance programs that cover the cost of insulation, ceiling, and furnace repairs for older homeowners, which lowers your utility bill for years afterward, not just one season. Both are run at the state level through your local Department of Human Services or Area Agency on Aging, and both are chronically underused for the exact same reason as everything else on this list. Nobody automatically tells you they exist. So here's what I want you to do. The benefits, the discounts, the assistance programs most seniors qualify for but never end up using. I pulled them all together in one place, broken down by state and by program, so you're not stuck searching through confusing government pages for hours. It's simple, it's fast, and any senior can find exactly what applies to their situation. Doesn't matter what state you live in, there's help out there you're probably missing out on. It's called the Senior Benefit Playbook, and it's sitting in the first pinned comment right under this video. Just tap it once, and you will have everything you need. Now stay right here, because the last one is the biggest bill most seniors never stop paying. And it's the reason I made this whole video. The one most people never question at all, your Medicare premium. Every month, before your Social Security check ever reaches your hands, a payment for Medicare Part B is pulled straight out of it. In 2026, that amount is $202.90. Most people simply accept this as the price of having Medicare and never look any further. But there are state-run programs called Medicare Savings Programs whose entire job is to pay that premium for you if your income is modest enough. Depending on which version you qualify for, the program can cover just the Part B premium, or it can go further and cover your deductibles and copays as well. Covering the premium alone puts more than $2,400 a year back into your check. And the moment you're approved for a Medicare Savings Program, you're typically enrolled automatically in that extra help benefit we talked about earlier. So instead of applying for the two separately, one application can unlock both. Put the premium relief and the drug cost relief together, and you are looking at a benefit worth close to $8,000 a year, from paperwork that takes maybe 20 minutes to complete. The income lines are looser than most people assume, and that's exactly where people talk themselves out of applying before they've even checked. In many states, a single person can qualify with a monthly income in the range of $1,300 to $1,600, and the more generous version of the program at the lower end of that range can cover far more than the premium alone. These numbers move slightly by state and by year, so the only way to know for certain is to ask, not to guess and assume you make too much. You apply through your state Medicaid office or by calling Medicare directly and asking specifically about Medicare Savings Programs. Use the official number, not a random search result, so you know you're reaching the real program. Why none of this fixes itself? Step back and look at what every single one of these has in common, because it's the whole reason they stay hidden in plain sight. Not one of them switches on by itself. The program that pays your Medicare premium waits in total silence until you apply for it. The property tax freeze waits until you file, and in most places, only during a specific window. The tax deductions that could bring your federal bill to zero only work if your return is actually prepared with them included. The drug cost help and the phone discount both sit there completely untouched until somebody reaches out and claims them. Every one of these was written into the law specifically to help people in your position, and every one of them was wrapped in just enough paperwork, just enough unfamiliar language, that most people either give up partway through or never start at all. Nobody is lying to you about any of this. The system is simply built on the quiet assumption that you'll stay unaware and keep paying the full amount, because every dollar of relief they give you is a dollar of revenue somebody else loses, and nobody chases you down to volunteer it. What to actually do with this? You don't need to chase all 5 of these down today and burn out trying. Pick the one that matters most for your specific life and start there this week. If a Medicare premium is coming out of your check every month, call your state about the Medicare Savings Program first. That's the door worth close to $8,000. If you own your home, call your county assessor's office and ask about the senior property tax exemption or freeze. And ask specifically whether there's a filing deadline tied to the year you turn eligible. If you file a tax return, before it gets submitted, confirm in plain language that your full age 65 deductions, both the regular one and the new bonus deduction, were actually applied. If you're managing prescriptions on a tight budget, look into extra help directly through Social Security, even if you don't qualify for the state program. And if your phone or internet bill has never once changed in years, check whether Lifeline applies to your household. One phone call, one form. 10 or 20 minutes of your time against money that's been legally yours the entire time you've been paying it out of habit.